Thank you for tuning in to the Conor Chepenik podcast. This is episode 6, and I'm joined by fellow Bitcoiner Sean, who I met at a Boston BitDevs meetup. Appreciate you making some time to come on here and discuss Bitcoin with me, Sean.
Yeah, appreciate you having me, Connor.
Absolutely. So you sent me a piece titled "Counterfeit Capitalism," and I thought it was a great read, and it just hit home so much because I think the past 2 years, a lot of people have seen that this capitalist system that we have in the United States has its faults, to say the least. It has cracks. There's obviously an entity who can manipulate the games. Like Preston Pish gave the analogy of a monopoly game, and there's clearly a central actor who can manipulate the rules. So the first question I had for you, inspired by that piece, is just: do you think that the risk-free rate is actually risk-free? Everyone in traditional finance obviously talks about the fact that the Fed, their treasuries, there's no chance they default. But as we've seen, it's looking like they're just going to print the money to pay back their debts, which means those dollars that you get will be worth way less. So I'd love to start the conversation by getting your thoughts on if you think the risk-free rate is actually risk-free.
Yeah, so I'll start with some earlier background before I get to that, because it ties into where I learned what the risk-free rate was. But growing up, I've always been super interested in finance and investing. I thought it was like a reliable way to build wealth for your future. So I studied finance in undergrad, and yeah, that was one of the earliest things you learn is the risk-free rate, because finance likes to value everything else based on what you could get without taking on risk to show if you want to take on X amount of risk, like you should be receiving X amount more reward than what you would get with the risk-free rate. And for those who aren't aware, the risk-free rate is essentially what the U.S. Treasury bonds will be offering you. So usually it's the 2-year bond they'll peg it to. So whatever you can get, what yield you can receive from the U.S. government for lending them money for their 2 year is considered to be risk-free. But it's definitely not a risk-free rate, because if it were risk-free, then there wouldn't be credit default swaps trading against it. They're very low. It's like 20 basis points. But there are people out there in the world that are willing to take the other side of that bet and say, like, oh, this has a chance at default, a 20 basis point chance at default. So it's not completely risk-free. Um, but credit default swaps are like a new financial security. They really only came out in like the mid 1990s. So before that, we've always called the world powers treasury, their debt, they're risk free because it's backed by their ability to manipulate money supply. But it's definitely, in a sense, it's risk free because they'll always pay back their debt one way or another. But in a sense of like the U.S. government never being able to default, you can never say never. It's not risk free.
Well, you brought up the credit default swaps too. Say in a situation where they did default, which seems impossible because they can just print money, so they could default in the sense that the money will be so devalued. But say they have a traditional default, could those credit default swaps even be paid back? Wouldn't the banks who are offering those be insolvent at that point?
It's such a good question. I'm pretty sure that I'm not 100% sure on this, but during the '08 crisis, there was a lot of credit default swaps that never got fulfilled because the counterparty holding the other end of that bet went bankrupt. So yeah, it's definitely not a credit default swaps are not the best bet if you're gonna be taking one against against a sovereign nation failing, especially the world reserve currency. So yeah, they're a pretty obscure financial security. They don't really offer much utility in that type of scenario.
Yeah, I like the Greg Foss framework of thinking of Bitcoin as essentially a CDS on all nation states, and one where you don't have to worry about a counterparty risk as long as you take self custody of those coins. You don't have to worry that the entity who's holding your coins will be insolvent. You can just verify for yourself, which is unlike any financial tool I think humanity's ever had in its history.
I agree. I'd have to say the only other thing that could like meet most of those requirements would be gold if you're going to hold gold on your own. But obviously there are way more pros to holding Bitcoin over gold. Uh, but gold you could hold on your own, and it could serve that function if if the U.S. government was going to default, then this is something that people will value and something that could be a transition to what would be next if they were to actually default.
Yeah, I agree. I feel like though for the kids growing up, like the future generations, like gold is cool to wear as jewelry, and I have such a hard time imagining kids growing up will look to something like gold because fiat currency came to be because even though gold is a great store of value, it couldn't keep up with the velocity of money. I saw Peter Schiff, who's always tweeting about Bitcoin, even though he hates it, and someone like commented under one of his posts, and I forget exactly what he said, but Peter was basically obviously bashing on Bitcoin, and the guy made the point. He's like, if journalism, if most newspapers died for online media, what makes you think that gold won't be able to compete with Bitcoin? And I feel like it's just. And Peter made the point under the post. He's like, the newspapers got outdated because online media is a much better way to distribute that content. It's like, well, what do you think is a better way to distribute money? Gold? And like, I'm not against gold. I think gold has been a great store of value, and I just think it's been so heavily manipulated. And the only reason we have fiat currencies is because it couldn't be distributed in the same way that normal newspapers. I mean, it's nice to hold and read like there's something cool about that, but it's just you can't distribute that content to billions of people at the snap of a finger in the same way that online media can, in the same way that Bitcoin can.
Yeah, it makes me think about, there's a really cool fidelity chart where they compare fiat currency versus Bitcoin versus gold and like its properties. And that's really what first opened my eyes to like see those differences. Is gold it's not easily divisible, so it doesn't serve well as like in transaction purposes, and it's not easy to move across space. Like it's a physical object, so it comes with a lot of cons that will that make it forced to be centralized if it's going to serve as like the center of a financial system. And that's how we got here to begin with. Was we trusted central banks and big banks to hold our gold for us and give us notes and say, oh, you have this much gold, or this is how much value you have. And that's how we got in this mess in the first place. So to go back down that road would just be like ignorant of history. But yeah, so gold has some functions. It could be a good store of value, but in terms of what would come next and what the world will choose when it measures all of the properties of the options available, Bitcoin is by far the best.
100%. Yeah, it's hard talking to those who don't think that Bitcoin is going to just obsolete all these things. And it's like gold is great, but it falls into that same, you need centralized entities. It's hard to verify for yourself that the gold hasn't been mixed with other metals, or that the gold hasn't been tampered with, or that the central entity you're going to trade with isn't going to give you less money because gold is just not that accepted. And obviously Bitcoin isn't incredibly accepted, or not everyone accepts Bitcoin for their goods or services, but it seems like that number is growing exponentially.
Mm-hmm.
And it's pretty easy for anyone to just download a Moon wallet or a wallet of Satoshi and accept Bitcoin on the spot. Versus I can't think of the last time that I saw someone building out software that showed you stores that accept gold or place. So I don't mean to bash gold, because I know it's been it's the money the free market chose, but it does just seem like it's wild that some people think gold is going to be the answer to this next generation with all the centralizing failures.
I like how you say it's the money that free market chose, because it is, and the free market chose it because safety and the stock to flow, or I remember if it's high or low, but basically it's hard to produce more gold. That's why we chose it, because it's hard for you to get your wealth devalued through an existing supply of it. So that's why humans gravitated towards gold as a store of value. That's why we still do, but it's not absolutely scarce. It's relatively scarce. So if the price of gold doubles tomorrow, the yearly supply mined is not going to be the normal 5%. It's going to be like 10 to 15%, because now there's an added economic incentive for producers to mine more, and then your gold will be devalued as a byproduct of that. Whereas Bitcoin's supply curve is exponentially scarce. It's just going to get exponentially more scarce every 4 years until 2140, where from then on there will be no more than 21 million. So there's if you're investing for scarcity to hold your value in, there is nothing more scarce on planet Earth than Bitcoin. Nothing that compares to it.
Yeah, 100%. It's cool to think about how, if that incentive to mine gold becomes, if gold becomes more valuable, that incentive is greatly increased. So more people will look to mine that gold. Whereas with Bitcoin, the supply cannot change. It is set in stone from when Satoshi created it. So it doesn't matter how much that number goes up. More people can mine for it, but that just increases the security of the network. It just means more hash is coming online, but it doesn't change the amount of Bitcoin there is. And that, I mean, we've never had an asset like that. Like humanity has never had something like that.
Yeah, I love the way Jeff Booth says how humanity's never had something that's decentralized and secure at the base layer. Like that, we've always had to rely on some form of centralization at the base layer, and it or sacrifice security. I mean, those things don't last long. So it is it's something that humanity's never seen before, and I think that's why it's so widely misunderstood, and and why it's so hard to predict what's going to happen next with it. Because even the people who do have a stronger understanding of what it actually is, it's hard for us to fathom how it's going to change the world.
Yeah, 100%. And especially, in this short term, when you see the Fed raising rates so rapidly, a lot of people, I'm not a finance guy, but just looking at these charts, it's pretty clear that for a long time, like since 2008, the Fed was holding those interest rates damn near zero for most of the time. They tried to jack them up right before COVID. Treasury market goes illiquid. They have to step in, print trillions of dollars, and then now it's pretty wild to think. Yeah, most Bitcoiners obviously were talking about in the beginning of 2022. There's no way the Fed can raise the rates like the way they've been, and I know markets are kind of lagging, but it seems like there's going to be a lot of pain ahead, and now a lot of people are stepping out of Bitcoin because they can get 4% or whatever it is risk-free rate. But if you look at the math, I mean, I don't want to like make it seem like it's all doom and gloom, but it seems like the two choices they have are deep recession or I don't want to say hyperinflation, but something paralleling it. And it seems like, with Congress passing this $1.7 trillion omnibus bill and no political will to reduce spending, it seems like politicians are going to be forcing the Fed to print ungodly amounts of money, and they might try and obfuscate it and make it seem like they're not doing it, and they might hold the interest rate up here, but it's pretty comical to think that they're raising the interest rates while at the same time getting ready to print more money to create more national debt to pay for spending that wouldn't be able to be paid for if we didn't have the ability to just print the world's reserve currency out of thin air.
Yeah, it's a complicated system, and it never made sense to me at first. It took me a while to like really swallow like how governments differ from companies, because we learn, but most of like finance undergrad we're studying companies and how they operate, and profits and losses and everything that goes along with their revenues and expenses and their accounting. But governments, like, they seem to just almost be able to bend all the rules, and we knew it was because they controlled the currency, but like it's more complicated than just the way we say money printing. But essentially, that's what's happening, and it's impossible for companies to run at deficits for this long. But our government does it, and the only way we'd be able to turn around with this massive boat of just ungodly amounts of debt we've accumulated is to start running a profit. And that would that would require us to spend less as a nation, which no politician's going to get voted in if they're spending less. They're going to say, we're actually going to cut away from all these things you guys benefit in or supposedly benefit from sometimes. But or we need to increase and addition to that, addition to cutting spending, we need to increase GDP. Um,
Yeah.
and it's more complicated than just increasing GDP, because nominal or real? Are we increasing GDP by stimulating the economy, like producing more money and letting people spend it? And now, oh, look, the numbers up. Um, or is this actual real growth that's coming? So we've gotten so far along. The numbers don't add up. There's no way we'd ever be able to pay off this debt by just, natural, healthy economic productivity like that. So the only option left is financial repression or default. And there's no way we're defaulting. There hasn't been a world reserve power in history that ever just defaulted on their debt. They always take the latter path because default would just cause havoc. This will too, but it's a little bit more down the horizon. You don't really have to worry about it. But financial repression is basically holding interest rates below inflation. So if inflation's running at 5%, holding inflation interest at about 2. So what that allows the government to do is trap all investors from securing wealth, because the majority of wealth in this world is invested in bonds. And if your bonds are all performing negative, then people are losing money. There's no value being created, no like economic productivity, but there's being wealth like sucked out of the system to pay off the outstanding debt. And it did work. It worked after World War II. The U.S. government did it successfully for about a decade following World War II. But the amount they'd have to the amount of financial repression they'd have to do to pull this one off would just be scary. Like I don't think we could survive it.
Yeah.
It's like walking a tightrope blindfolded and drunk. There's no way they'd be able to do this without accidentally causing some sort of like hyperinflation or it's something going wrong. It's such a delicate and intertwined system. There's no way this will be pulled off successfully.
Yeah, to an earlier point you made too about GDP, I saw, and I might get these numbers wrong, but Thomas Massey, the congressman from Kentucky, tweeted out the percent of government spending that was making up our GDP, and this was over like a long time frame. So again, I could be getting these numbers wrong, but I think it was from like 8% to 24% or something like that on this chart over the course of like 50 to 100 years, something like that, and it just goes to show. Like you talked about this in your paper you sent me. It's like what's valuable to people. Government agencies aren't beholden to the free market, so they're not. They keep operating even when they're not providing the value that in free market would put them out of business, would make them obsolete. And I think a lot of the traditional tools we use to measure things, I don't want to say they're completely phony, but it's kind of like the risk-free rate. Like it's not risk-free if you're investing in a bond and then you end up losing money because you get trapped, so the government can start to shrink their debt to GDP ratio. And GDP itself seems like a flawed measure if the government can step in and make up such a big portion of it based on their spending. Like there's so much pork in this omnibus bill, but like some of the stuff in here, it's like who's that providing value for? Other than the politicians doing these backdoor quid pro quo deals, and it just seems like they're the more ridiculous this the more ridiculous the system gets, the harder it is to actually measure things in a fair sense. And obviously, Bitcoiners always say, "Oh, one Bitcoin equals one Bitcoin" in a tongue-in-cheek fashion.
Yeah.
But I think as this thing gets bigger, it's hard to measure it in terms of fiat currency when fiat is like dying. It's breathing its last breath. So of course, Bitcoin's all over the place. Look at the gold chart in Weimar Germany.
Yeah. It's and fiat's ever changing, so it's not something you can always like look back and peg to. Of course, the U.S. dollar changes the least out of all fiat currencies. By change, I mean devalues over time. But yeah, I really was not woken up to this until my last year of undergrad. I took like international portfolio management, and you realize like we have the strongest currency in the world, and the other 6 billion people out there have currencies that make it impossible to save past one generation and some past 1 year. Like Turkey's G20 country and their inflation's like 60%, like 60. How do you save for your future in an environment like that? The only options you have is to instantly buy real things for your currency that devalues quicker. So it's like you're probably better off buying a banana with your currency, because that will rot slower than the value of your currency. Like you have to buy real things. You can't hold on to currency to hold wealth. So it's really, I never realized how hard it was for everybody else in the world to like save and pass things down to their kids. We are part of us, a fraction of the world that actually has the ability to do that, and we're blessed for that. But at the same time, we still are in the same bus. Like our currency is devalued. Just because ours devalues slower doesn't mean it's a good idea or like this is a system that works. It's all
Yeah.
manipulation.
No, man, I shouldn't laugh, but you're absolutely right. Like our currency is deflating, and then these other weaker currencies like the Turkish lira or Latin American countries, Venezuela, Argentina, like their currencies are devaluing way faster than ours to the point that people are literally buying food the second they get their paychecks because they know that the next time they go to the grocery store, that food bill is going to be 1.5, 2 times as much, and it doesn't get talked about often because it's not so evident. It's kind of obfuscated. But when money is dying like that, people take much bigger risks. And obviously, there's a time and place to take risk. I'm not saying taking risk is bad, but you shouldn't have to go all the way out on the risk curve just to preserve your wealth. And in this system of fiat currency, I feel like savings and investments gets mixed. I've heard Keynesians say like, "Oh, deflation's bad because then people would hoard their money," and it just seems like such an asinine idea. Like if my options are hold money because I think it'll be more in the future, or buy food and not starve, obviously I'm going to buy the food. And I think savings is something that shouldn't be punished. People shouldn't lose their value because they're saving, which theoretically should be a good thing. Like, what if you're saving to buy a house or saving to buy a car or stuff that quote grows GDP? Again, I don't think GDP is the best metric,
Yes.
but you should be able to save and then purchase something when you want it. Everyone's at a different point in their life and everyone has different uses for their money. So this idea that savings and investments should be one thing just seems so wrong. And it seems to be what's happening as money becomes weaker and weaker because people are just holding anything but cash. They don't want to hold the cash because, as the point you made, they know it'll be worth less in the future.
Yeah, it's so well said about savings and investments. They should be two separate things, but we haven't had that luxury. And it's because of this reason. You can't hold cash to save. You have to buy things, and that's what leads to these. I love the WTF happened in 1971. Yeah, that
Great
website.
website.
There's this one chart of the S&P 500, and yeah, it just goes up forever. And that's not because the stocks are there's the stocks are getting that much more valuable. It's because people don't have any other options to store their wealth. Like you have to go out on the risk curve in order to save your wealth. You can't have a retirement unless you open up, an IRA or a 401k and start putting money in there and buying stocks and bonds. But I think that's so backwards because what you're doing when you're buying a bond or a stock is you're taking risk. Like even bonds are like considered low risk. Yeah, they're low risk, or depending on the yield, obviously. But you're receiving yield because you're taking risk. You're lending out. You're foregoing your purchasing power, and there is risk involved in that. So everybody is forced to take risk just to be able to make ends meet in the future. And once you realize that, you're like, okay, so basically what you work for and earn now isn't enough. Like you don't even get to keep what you earn now. It just loses its value over time. So you have to give it back out and start investing again. And that's what just causes these massive like housing, but like it's how many houses are owned is just not even lived in. Like all these BlackRock articles about how much, how many all these investment firms are buying houses because houses hold their value. They can't hold cash because cash loses their value, but they're not actually getting the utility out of the house. So that's what's like. There's all these things that are. This incentive is what drives up the prices of all assets, and it's because we're forced to buy things. If we don't, we lose our value. So you're right. We don't, and it's so funny because most people don't realize they think Bitcoin's like a volatile, speculative asset far out on the risk curve. But then when you really dig down, you're like, no, this is the first like pure savings technology we've ever had. This is property rights delivered to everybody on planet Earth without a government that needs to administer those property rights. Like you own this, and nobody can take it from you. Nobody can devalue it from you, and you own it. So you can just save in it, and it'll be worth more tomorrow because the supply curve is, exponentially decreasing over time.
And I think it's just such a great lesson in human nature that we have the most ultimate, pristine, perfect risk-off asset, and 99.9% of the world is looking at this thing like it's a
Risk
huge
on.
risk on asset to get wealthy. And it actually kind of leads me to my next question I wanted to ask you about. You mentioned in your article how like what you were just talking about creates all these arbitrage opportunities for people to essentially, I mean, look at the wealthiest people in the world. Most of them don't take a salary. They just borrow against their assets and then use that money to spend how they want. And then another counterparty is taking, they're getting yield for lending that money. And the question I had for you is, can you speak to how these arbitrage opportunities wreak havoc on the poorest in the world? Even those who might realize they are better off taking on debt typically can't compete with Apple because it's just an example, their sheer size. Apple or another massive company can borrow way more just because they're such a they're such a massive company, and it makes it a lot harder for even the people who might realize that being in debt is kind of how you win this game. It's like the smaller entities are just crowded out because it's less risky if you're a bank to just lend to Apple, who understands the game and is going to take on debt to pay their bills rather than use the cash they have today. So it's just all these misaligned arbitrage opportunities all over the place.
Yeah, this was one of the. I'm always questioning things as I'm learning, healthy habit, and this was one of the things that just never resonated with me when I was in school. And we were like, our professor literally articulated that you're able to profit if you are borrowing money below inflation rate. So that's why in the article I talk about how you see so many pundits on like CNBC and stuff talk about like they'll critique the Fed. They're like, oh, they held interest rates way too low for too long, and now this is what happened. But of course, when interest rates are low, we know QE is happening. Everybody who has credit rating worthiness, like these massive companies, anybody rich, quite frankly, will borrow money to pay for things because you're profiting by doing so. Because inflation is going to rise, and you're taking out loans at interest below inflation. Like for instance, I took out a student loan to go to school, and I think it was like in the 3% range. And with inflation at 9%, I'm actually at profiting money by I had to borrow and spent that instead of just paying for it out of pocket. I would have been worse off if I paid for it out of pocket. So in this backwards world, people are incentivized to borrow from others instead of responsibly save and pay for themselves. And for companies, their debt isn't the same as individuals, companies and governments. So an individual, if you take out a mortgage on a house, you have to pay back every month your interest and a portion of the principal. But companies and governments, they take out $100 million loan. The way it worked for 10 years, you're paying back whatever the interest was, 3%, or it's probably much lower for Apple, 0.5%, 50 basis points. They're paying that interest payment monthly or quarterly or yearly, whatever the contract is. But they don't have to pay the lump sum principal back until the end. So once it expires, instead of paying it, they just take out a new loan to pay the principal, and then just go back to paying interest payments. So that's why when we have periods of prolonged high interest rates, companies that are going through this debt cycle where they have to refresh their outstanding principal payments, when they get caught in a position of high interest rates, a lot of them go bankrupt because they can't take it a loan to pay for this principal they have to pay. So it's kind of an advantage because paying your principal with interest is it's a much higher monthly expense than just paying lower. And in addition, obviously they can borrow for much, depending on the company, obviously they could borrow for much less. So it's everything just seems so backwards. Like I'm learning this and I'm like, it doesn't make logical sense. Like, why is this the way it is? This doesn't make sense.
Yeah, and one thing I just realized with you speaking there, I just read or listened to on Guy Swan's Audible Alex Gladstein's piece on how the IMF and the World Bank do this. And that's like, for people who don't know, nation states and companies are completely different. When these boom and bust cycles, when these companies can't refinance because the interest rate they're going to have to pay on this principal is too high, they go bankrupt. They go out of business. But when the IMF and the World Bank, they give a loan to a less developed country, they don't want to take that right off on their balance sheet. They don't want to have to reduce their balance sheet because the developed country had to declare bankruptcy. So they give them another loan to just pay back the interest rate, and it just leads to this vicious cycle where they're putting all these stipulations in their loan, and they're just harvesting these countries for all the resources they have. The people there are getting absolutely screwed, and according to the piece that Alex Gladstein wrote, most of these institutions like the IMF and the World Bank are more than happy to work with dictators and authoritarian regimes because they know they're happy. They're not looking at the stipulations that are going to screw over the little guy. They're just going to gladly take this money, take the check, bootstrap future generations to come with debt, and then use that fresh capital that they're going to get today to buy whatever projects they want to do in their and it's such a vicious thing, because rather than letting these sovereign nation states declare bankruptcy and start from square one, that principle just gets bigger, and it's, you look at, there's no realistic way they can ever pay back this money. And I don't think the IMF and the World Bank really, it's so ironic. The World Bank literally Twitter Abbey picture is like in poverty. It's like you are making these people poor. You are stealing all of these resources from them, and you're just making it worse every time. You just give them another loan so you don't have to take a hit on your balance sheet.
Yeah, bankruptcy is a healthy thing. It sounds scary, but it flushes risk out of the system, and we've avoided it here, and that's what's led to the bubbles we have. But for anyone that hasn't checked out Alex Gladstein's work, it's an absolute must. I think he might have been the first person that really opened my eyes to what Bitcoin's value was for the world. And his recent work on the IMF, what really blew my mind was the U.S. exports dollars. That is what we do for the world. People need dollars to buy, petrol and other things from other nations. Nations need dollars to trade, and nations need other third world countries, their governments need to borrow dollars to run their operations. They can't borrow their local currency because that implies too much risk for the investor. I pick a country, but I'm not going to lend you Turkish liras to run your government because they're probably going to be worth a lot less in the future, and I don't want to get paid back in Turkish liras. So people lend dollars to these countries, and they need dollars to operate. And the problem with that is now they're incentivized to fulfill export demands that dollars want, instead of just, regular export demands that their country may need. So I forget the specific examples that he was giving, but they were mind-blowing. And basically the moral of them was these countries were sacrificing self-sustainability, things that they could do to build up their country and be unreliant from others. They were sacrificing these opportunities to farm things, to just mass produce things and sell them for dollars to pay off these debts that they have. So instead of them trying to rebuild up their nation organically and build a strong society and functioning economy, they're just clawing at anything that will give them dollars. And it's a way for the U.S. dollar system I hate to say it, for us to live as lavishly as we can. I don't think shrimp would be as cheap as it was if the IMF didn't exist, and if these countries weren't taking out these loans.
Yeah, if we weren't stealing Bangladesh's shrimps. And,
yeah.
To your point, it's even more malicious than that, because not only can we print the money that everyone else in the world has to pay for, so obviously we can live much more lavishly, but then these countries, like you were saying, they don't have food sovereignty because they're not growing their own food. They're just focused on their own exports. So then when we do sanction them because their government does something we don't approve of, they are screwed. I mean, those sanctions kill millions of people of starvation or whatever else because they have to import food. And if they get sanctioned, they just do not have the infrastructure in place to feed their populations. And a lot of this gets obfuscated and just, most people aren't thinking about this. Bitcoiners are maybe.
Yeah.
But most other people just want to look the other way. And it's it's heart-wrenching to hear this and think all of the luxuries I'm afforded as a citizen of the United States, this comes on the back of children starving in less developed countries because our government didn't like what their government was doing. It just seems so heinous. And when you say Bitcoin fixes this, some people look at you like,
you have 6
you're
heads.
crazy.
Yeah.
You have 6 heads, but it's if everyone was on a Bitcoin standard, no country, the United States, could just print money out of thin air that everyone else had to work for. People would be more beholden to an actual free market
Reality.
system. Reality. Yeah, it's exact. we have severed our tie to reality with fiat currency. You know,
Yeah.
when Ethereum went to proof of stake, you just get a quick jab in. They severed their tie to reality, and fiat severed its tie to reality when we went off the gold standard. And obviously, they were manipulating it, but when we went off that gold standard, it's like, you know, like that WTF happened in 1971 chart. Which,
Yep.
by the way, the creator of, quick plug for mass adoption. If you're in the Massachusetts area, come to the Bitcoin meetup. We'd love to have you. But yeah, that whole chart, it's like the second you sever that tie to reality, it just leads to all these perverse incentives, and Bitcoin fixes that. I don't know how else to say it. Bitcoin fixes a lot of these things.
Yeah, and I like how you said it's really about censorship. And what turned me on to this was Ray Dalio's The Changing World Order. I read that book before I kind of found Bitcoin, and it made me realize, I was like, wow, like we have so much power being the world reserve currency, but we're losing it. Like we're falling, and it's sort of inevitable at this point that we will lose the reserve currency. It's just a matter of when, not if. I don't know. We may be able to kick the can down the road far enough for me until I'm gone off this earth, but it will happen. So, and what's going to come next? That's the question. And we are talking a lot about here about some bad things the U.S. government and the Fed has been in, but I really, I agree with a lot of the values of this country and what it was founded on. I love this country, but that doesn't mean that because I think it's good, they should run the world reserve currency. And the problem with that is if once we're gone, who gets it next? Like his big thesis is China, and like I don't know if it's true or not, but regardless, I don't care who has it. It's the problem that anybody has it. Like nobody should have this type of control and manipulation over something that everybody else in the world needs, like the nucleus of the world economy. So I that was the conclusion I came to before I found Bitcoin. So I was the decentralization advocate before I found it. And then once I did, it just everything clicked. I was like, this is currency that nobody controls, nobody can manipulate, nobody can censor other parties from participating or using it. No, there's no question that this is the currency that enemies are going to want to use if they're going to have to trade with one another. And we've had this extended period of, I don't want to say peace, but like, some good trading for the past at least 20, 30 years with, our quote unquote enemies. And once things really hit the fan, it's like we cut we cut them off. We cut them off from the dollar system. They're definitely looking like, wow, what is something that we could use to trade with that nobody can cut off? And of course they, tried to make their ruble valuable and insist that people pay them in rubles for oil and such. And that could be like a short-term attempt, but they will find Bitcoin and they're going to say, this is something that we can always use to transact with anybody around the world and nobody can stop us from doing it. This is what enemies are going to use to trade with each other. It's the only thing that they can use because it's purely decentralized.
Man, that's so spot on. You see all this stuff coming with the BRICS currency, and I do think there's some stuff to be concerned about. But like I'm with you, the U.S. Constitution is one of the most beautiful pieces of paper that has ever been written, and it has given us so much opportunity in freedom and liberty and all these amazing things in the states. And I feel like severing that tie from reality in 1971, we went off the gold standard, has obviously allowed our politicians to erode and chip away at some of those liberties. But compared to a lot of other authoritarian regimes in the world, we are so fortunate. And, to your point, it's like having the world reserve currency is a huge privilege, but it's also gutted our manufacturing base here because that means we have to go find cheaper countries to produce those goods and services because it's not economically viable here. And I think with these BRICS currencies, I don't know exactly how they're going to try and back them or what they're going to do. But I think what a lot of these BRICS nations are going to find is they're running into the exact same problems that the United States has run into with the Triffin's dilemma and having the world reserve currency and having to offshore all of your manufacturing and infrastructure for the most part because those businesses are just not economically viable because of how strong the dollar is. So you're looking for cheaper places to do it. And inevitably, like you're saying, they're going to end up going the Bitcoin route because it doesn't make sense to trust that, every nation wants their currency to be the strongest, but they don't. China doesn't want to hold rubles, and Russia doesn't want to hold yuan, and Brazil doesn't want to hold the Indian rupee. They want their own currency to be the strongest. So
it's a giant game of hot potato. It's like we just needed to exchange, but we don't want it. Like it's just the only means we have to interact with one another.
Yeah, And I do wonder too with the dollar, as shitty as the dollar is, and as screwed as it is, and messed up that we sanctioned Russia and kicked them off the system and showed everyone we will use this money as a political tool. There is still a massive demand for these dollars, and I wonder with stable coins. This is all speculation, but I've heard a lot of people talk about like, well, who's going to be the next buyer of treasuries? Most nation states are offloading their treasuries. Who's going to be that next buyer? And you could kind of see a world where the approved companies, so maybe that's Tether, obviously USDC, whatever other stablecoin, they start buying those treasuries to hold as an asset that they can redeem for cash on the spot, especially if these yields persist, which, if inflation is at 8% and they hold it at 4%, they look like they're talking tough, but there's still financial repression going on. But it seems like there is a world where, these stable coins, for all their faults, can move very rapidly, even if they are centralized. Obviously, Circle and Tether have companies, but they can move much quicker than traditional dollars. And I feel like you might see the regulators continue to drag their feet because they know that, we need some demand. It just looks horrible if the Fed is just buying or if they're giving private banks money to just buy all those treasuries outright.
Because they can't do it themselves.
Yeah, they can't do it themselves. So it's like, the parent giving the kid money. Hey, go buy this for me.
That's a pretty good idea. It's possible. And if it does happen, I bet you it'll be short-lived. It'll be a bridge until, one of the last kicks they give this can to try and say, oh, maybe here's a kind of a CBDC, like a phony one that they really could control because they're all US based companies. So they would have to comply with the regulations that the government would have. So it would be completely centralized, but it would maybe get everybody's feet wet in terms of interacting with the Lightning Network and figuring out using digital currency instead of what we use now is basically digital, but actual digital currency. And it would probably be a short-lived bridge until people realize, why are we using this? Like, Bitcoin is so much better.
Why am I holding this dollar shitcoin?
Yeah, it's right here and ready to go. Like, we don't have to worry about it. But that might serve as a good bridge while all of these scaling and custody solutions are being developed for Bitcoin, while it's not quite ready yet for 7 billion people to hop on the network. This could be a good, delay until it's really ready to start taking on.
Yeah, I love the Blue Collar Bitcoin podcast framework of stablecoins, which is like stablecoins are just the scaffolding as we build this beautiful hyper Bitcoinized building or world, And I think that's such an apt point. As much as I love Bitcoin, and that you do too, if we just woke up tomorrow and the dollar system was destroyed and it all went to hell, it would be rough. Like, the only thing we might be able to buy with our Bitcoin is bullets and beefs. Like, it would not be a pretty world tomorrow if it just all fiat failed. And hopefully, with scaffolding of the stable coins and whatnot, we can have a smooth transition to where we don't have to watch the system just completely crumble, but slowly die off as we build a much more fair and beautiful system.
I was a pretty big cynic before I found Bitcoin, because I just was adamant that this would happen eventually and that I would probably be alive to see it since I'm still pretty young. But I really think now the timing could be perfect. It's all about developing in the background while this continues to crumble and making sure we can have as smooth as a transition as possible. I don't know. I have a feeling there might still be some chaos because there are a lot of people in this world. Like, half the U.S. doesn't even own any assets. They just, they live paycheck to paycheck, and inflation only makes their lives harder and harder because they're not getting any of the upside from inflation, which is asset price, appreciation. So for those, it will be a rough transition for some people in the world. There's no doubt, but mitigating that chaos is dependent upon how much we build now. So that's why it's really been inspiring me to try and get active in the Bitcoin community.
Yeah, I mean, you look at fiat world, and to your point, like, we're the U.S., we're supposed to have the best dollar, the best horse at the glue factory. That's us. Like, we have the cleanest shirt in a pile of dirty shirts. We're the best. And you still see people struggling. I've heard people call CNN Crisis News Network, and just any of them. You turn on any of these mainstream media outlets, and it's like, oh my God, next pandemic, or oh my God, the world's going to hell, or oh my God, war in Ukraine. It's like it's always something. They're always catastrophizing.
Yeah.
You know what I
Yeah.
mean. And they're always
Embellish.
trying to embellishing and scaring people and making them fearful and making them nihilistic and making them seem like there's no point, there's no hope, it's all going to hell. And then you spend time at a Bitcoin meetup, and there's other things, but at least from my experience, like you go to a Bitcoin meetup and it's people who want to build, who are hopeful for the future, who are looking to create a better, more honest, more fair world, and not just wrapped up in all of this stuff that realistically we can't change. We have no say in. Bitcoiners seem to be more focused on building a beautiful, harmonious, peaceful, abundant world, and it seems like if you look in fiat land, there's always a crisis to be had. There's always something going on. So I think
Another boom and bust.
another boom and bust. So
Yeah.
it gives me a lot of hope too. Finding Bitcoin gives me a lot of hope for a better world.
I think the more I learned, once I found Jeff Booth, that's when my optimism really started to set in, um, because it took me getting beat over the head with him saying this, but maybe about the 100th time it finally clicked. But his whole thesis is that technology is deflationary, so it should bring the price of everything down. But deflation ruins our economic system. Like that's what causes everything to collapse. The fiat Ponzi. We need to create more debt to keep this thing going. It needs to constantly grow, or else it will collapse. So we have to, if we can't get that growth organically, we have to, print that growth. So, and doing so fights against these deflationary forces of technology. So like technology makes everything free eventually. Like how free did information become with Google? Like people all over the world can now get all this information for free at their fingertips. That was like not allowed before. It's going to make everything free, and the money that's going to have to be printed to offset that to save the current system it will go up exponentially as well, because technology is exponentially deflationary. And that sounds cynical, but the bright side of that is, hey, if we have a fixed money supply where we don't need to add more units of currency to the system in order to save it from the deflationary forces of technology, what will happen is the productivity gains and abundance that technology creates will be shared amongst all humans who hold this currency, because it'll get stronger in value over time. It'll be able to buy more goods today or tomorrow than it did today. And that sounds like the most beautiful world I could ever think of. Like I don't even know what it would look like. It's hard for me to even picture. Like, would we be working 5 days a week? What jobs would even exist? There's a $5 trillion a day foreign exchange market today of just banks settling foreign exchange currency transactions. That is so much money. They're taking fees off of every transaction, but they're not adding any value to society. Like, what I can't even begin to fathom how different this world would look, and how much abundance everybody would have. So that's what really started to kick me in for optimism. So if you're nihilistic or cynical, definitely give Jeff Booth's work a good 20 reads until it finally clicks with you, and you can see what this world would look like if it was more abundant.
It's such an apt point that it takes hearing it a lot of times, because I completely agree with Jeff Booth's thesis. I've read a lot of his work, and it made perfect sense that this inflationary force of, we'll just call it money printing from governments, is fighting this like deflationary force of technology. One thing I just had never thought of until you just said it is the fact that we can't give deflation a chance in our current system. Deflation would collapse the whole thing. And even though he's talked about it, I'd never spent any time thinking about it. Whereas Bitcoin can allow deflation to happen without crumbling the system. Whereas in fiat currency, it's just not viable. If we let this deflation happen, actors that at this point are too big to fail will go under, and there will just be so much pain. Everything's going to burn down. So they have to keep inflating stuff. And back to like the GDP point we made earlier, it's like, how do you measure the fact that people can log in the internet and get access to almost any information? How do you measure that you can put on a podcast and listen to some of the smartest people in the world talk for free, for the cost of your iPhone and the
Your
AirPods?
attention.
It's literally your attention. I
Yeah.
mean, most of this stuff is like, getting towards near zero. And under a Bitcoin standard, it seems like you could let that happen. You could let that deflation take hold, and we could live in this world of peace, abundance, prosperity, where people can do what they want with their time. And in this current system of fiat currency, governments have to print, or the gig is up. The musical chairs stop, and this massive bubble is just going to burst, and there's going to be too much pain. So they can't let it take hold. But they also have no idea how to value Google or Spotify or all these things that provide immense value that are not free, but essentially virtually free. The cost of internet and a client like a laptop or a phone to actually pull up what you want.
Yeah, it's fascinating. I don't know what the world will look like when it's different, but I hope I'm alive to see it. That's for sure.
I'm with you. Another piece you talked about in your article is how the more liquid a market is, the more likely it is for optimal price discovery to take place. And it kind of relates to what we were just talking about in the sense that the treasury market is supposed to be the most liquid market in the world. In 2019 or 2020, at some point, we saw it lock up, and then that's when they stepped in and made it as liquid as possible again. But I'd love to hear you kind of speak to why that is. The more liquid a market is, the more optimal price discovery can take place. And then it's kind of the thesis of the paper you wrote, how it's kind of a crony system because you have entities that can step in and make an illiquid market liquid again, when obviously that shouldn't be the case in a free market.
Yeah, so I got this idea because when I was younger, I used to resell a lot of shoes, and there's a couple instances where I learned this painful lesson. Like there would be a rare shoe that came out. There'd be like 3,000 pairs, like an obscure boutique that made their own special shoe. And there'd be like 2 or 3 sales online, and somebody paid like $900, and everybody's like, "Oh, the shoe's selling for $900." But like markets are bids and asks, and everybody isn't bidding the same amount. There's like a normal curve usually, distribution of bids and asks. So maybe 1 or 2 people paid $900, but who's left to continue to keep that bid up afterwards? And that's a painful lesson you learn. I bought like $250 pair of shoes and ended up taking a loss on it because even though they were rare and somebody paid $900 before, nobody wanted them later. And yeah, so the bids weren't there. So liquidity is a big. If a market is very liquid, if there's a lot of bids and a lot of asks, you'll see that spread be super small, like $1, maybe, or maybe it depends on it could be less between bids and asks. So there's a lot of people meeting at a price. So that's why if it's got that big spread, there's too much, there's not enough demand, and it's causing disconnect between buyers and sellers.
Yeah, I mean it's makes so much sense why Bitcoin is all over the place measured in U.S. dollars. Because at its biggest, it was a little over $1 trillion, and as of today, it's a $300 billion market, which is still a massive amount. I mean, $300 billion is that's a lot of money. But then, to your point earlier, there's a $5 trillion market for what, foreign currency exchange?
That's a daily volume of foreign currency exchange. It's the largest market in the world.
And yeah, they're not providing value. They're just taking that little fee so people can trade with each other. Yeah. And imagine if you could cut out those middlemen. I mean, imagine if you could just obsolete them. I mean, you can nowadays. We have that tool as humanity, yet because of just the inertia and the fact that these companies or these people exist, they're not going to give up on that. They're not going to just give up their ability to take a fee for helping people transact. It's going to take a lot of time for people to get comfortable with this stuff, for people to get comfortable with the software. And I think over a long enough time horizon, more people will obviously wake up and realize, holy crap, why am I paying 2% fees to trade in and out of my money? And I think you'll see businesses like Strike and others who do the same thing just absolutely blow up as they provide liquidity for people to, I can have US dollars and I can send, money to someone in Argentina. I can send them their pesos. And then Strike uses the Bitcoin rails to take care of all the stuff on the back end. I send dollars, they get pesos. And I mean, in the future, it's like with the way things are going, they're probably going to want the dollars. So maybe they just deliver dollars on those. But the fact that we have those things, it just seems like it's going to obsolete so many businesses and allow deflation to take hold. And then this world of peace, prosperity, abundance for all, rather than one where we're essentially forcing, through debt slavery, less developed countries to export one thing so they can pay us in the same thing that we can just create out of thin air.
so they could pay off their debts that they took from world banks. And I like to entertain the idea that everybody in their positions, in their characters, they think they're doing good. Like even the most evil of humans, like Hitler, he probably thought he was doing something good for the world, but in his messed up mind. But good and bad is not objective. So the IMF probably thinks they're doing something good, like they're helping these people like avoid bankruptcy, or I don't know what they tell themselves to help them sleep at night. Their intentions are probably not evil, but um, it's hard for people to like look at themselves from a third person perspective and really try and judge, whether what they're doing is good or bad, or the consequence of what's coming from it.
Yeah, the banality of evil. To your point, I'm sure these IMF agents who go down there, they've been promised that they're going to help these less developed countries. At least what they're probably being told from their leadership is, hey, you're going to help these less developed countries get financing to build out infrastructure and help improve their situation. And then they fly down there and they get to meet with leaders and they get to stay in the nicest hotels, and they're visiting a country they haven't been to before, and it's probably a cool experience. And I'm sure some of them in their, if you look at like, I think it was not John Kerry, John Perkins, I want to say, who wrote Confessions of an Economic Hitman. He talks about in that book how like over time he started to realize what he was doing was wrong, and then he wrote the book. And obviously it would have been nice if he had woke up a little earlier and not done it, but they probably would have just found someone else. And at least he had the heart to write a book explaining like, yeah, we pretty much gave these less developed countries loans, promised them that it would help them build out infrastructure that would completely improve their situation, when in reality that never happened. And then it was, they'd get the loan and then they'd turn around and, they get that loan from a public institution like the IMF or World Bank or whatever, and then they'd funnel that money right back to the United States by paying a private company in the United States to come and build out that infrastructure. So they pretty much just end up with debt and a giant interest payment that realistically they can't pay back. So they get another loan, and on it goes. But to your point, most of these people at these institutions, it's not like the World Bank is like, yeah, debt slavery. No, they're saying end poverty. So the people working there probably think they're helping, and sometimes you got to step back and get that 900-foot view. And if your job depends on you not seeing that 900-foot view, it's hard to step. It doesn't make them evil. It's just, who wants to bite that bullet? Who wants to swallow that pill?
And yeah, to your point, like I would have never seen this perspective had I not entertained an alternative approach. Like I learned how the current system works from a financial perspective, the tools central banks have at their disposal, like how countries manipulate their currency values to boost exports or imports, etc. Like there's a lot of like change that goes in to help this system just keep going. And then once I saw some completely opposite alternative, I was like, it really took me back. I was like, this is putting things in perspective that I haven't seen before. And I'm so happy I entertained the idea instead of being adamant that it was a Ponzi scheme like the first time I did in like 2017 before that. Because once you really entertain it, it's like something can draw down 80% and not collapse. I don't think it's a Ponzi scheme. Ponzi schemes need more money and more money to keep going, or else they get got. Like because they're lending out other people's money, and then you realize fiat is the real Ponzi. If we stop creating more debt, if we stop increasing money supply, then this house of cards falls. It's pretty funny how the majority of people see obscure cryptocurrency, which rightfully so, because there are the 22,000 others out there that are just straight up scams or long term cons. So it's easy to get them confused, but they never bothered to look in the mirror and say, well, we think those are Ponzi's, and what's the dollar? Like, is this a Ponzi?
Yeah, define a Ponzi for me and tell me how the dollar's not a Ponzi if you think Bitcoin's a Ponzi.
Riddle me that.
Sean, I really appreciate you coming on. The last question I have for you, in the spirit of intellectual honesty, obviously we're both Bitcoiners. We both really think this thing could do a lot of good. But say you're sitting in the shoes of someone in the IMF, or I guess in your own perspective, what scares you the most about Bitcoin? What worries you the most? Like, what are the biggest threats to this system that obviously we don't discuss all the time, because I think we get so excited for the good it can do. But it's not perfect. I mean, so I guess what is your biggest fear for Bitcoin?
Yeah, my biggest fear is that humanity, repeats its mistakes and doesn't learn from history. It if you know if shit hits the fan too soon per se, which I don't think it will. I think the governments can always kick the can down the road a little bit
Yeah,
farther.
knock on wood.
But
People thought 2008 was the end, right? And
yeah,
sure enough.
but if chaos really ensued and we needed to transition to something else, like Bitcoin just doesn't have the history yet, and gold does. Like people trust gold and they know gold, so it's possible that that would be like you know that would be the first thing that people turn to. And I mean, we already see central banks stacking up on gold recently. They've been buying record amounts of it, so that's what people know, and it's not easy to not change what people are, for people to learn or just change their perspectives. So that's I think that's the biggest Achilles heel for Bitcoin adoption. I don't think it would be the end of it, but I think it would delay it like another 100 years maybe. um, but besides that, I there it's too far gone. No nation state can attack it to the point of killing it. It's its own beast now. It's going to be here forever, whether people want it to be here or not.
Yeah, I completely agree. One of my biggest fears is just that the majority of people can't see the difference between crypto and Bitcoin. I mean, for myself, 2017 is when I got introduced, and I don't think it was really towards like some point in 2021 when it really clicked for me that Bitcoin is completely different than all this other stuff. Up until then, obviously I held the majority in Bitcoin, but I had played with the other stuff, and it was literally like trying to buy NFTs on Ethereum and just having to get wrapped ether and then not having enough ether to pay the transaction fee to put the wrapped ether through, and just think this is the most like, and Bitcoin maximalists on Twitter, like people give them crap for being toxic, but they really help me see it.
Yeah.
But a lot of times, until people go through that painful experience on their own and figure out for themselves, they're just not going to listen. It takes that painful experience to see the other side. So I hope that more people can start to realize the difference between Bitcoin and everything else, and realize that we're just in a classic boom and bust cycle. And I'm not trying to be tongue in cheek, but one Bitcoin equals one Bitcoin. It's tied to energy. That was Satoshi's incredible breakthrough,
Yeah.
tying it to energy and not fiat currency. But I also do wonder if, at some point institutions and nation states realize like, hey, we better get some of this Bitcoin before, quote unquote, the retail investor does, so we can persist many years into the future. Because if you read books like The Sovereign Individual and whatnot, I do think at some point we start seeing a future where nation states rapidly lose their power, because the incentive to use violence to enforce their laws just diminishes over time, as people can literally remember 12 words, get on a plane, and take their life's value with them.
Yep.
We become more and more, the more people who adopt Bitcoin, the more expensive we become to tyranny, which is an amazing thing in a time of, as great as technology it is, there's also all this other crap coming down the pipeline with people talking about social credit scores and how much carbon you can use, and movement passes, and all this other stuff that I think Bitcoiners are vehemently opposed to.
Yeah, one of the earliest memories I have of learning about Bitcoin is Alex Gladstein describing it as a Trojan horse for freedom and property rights, and that's what really woke me up. I was like, whoa, this is really going to strip a lot of power away from all governments around the world, and for the better, for self liberty.
Oh yeah,
This is the most American invention that's ever been invented.
amen. I mean, it's like the reincarnation of the U.S. Constitution in cyberspace.
Yeah.
It's the thing that's going to grant everyone in the world property rights and make it so people can store their value in something that can't be debased or manipulated or printed out of thin air by a central entity. It's a beautiful thing, and let's hope humanity figures it out before some painful lesson. Well, then again, there's been plenty of painful lessons in this journey.
I'll be here for the entire roller coaster ride, though, just waiting it through and watching everybody's reactions as it goes up and down.
Hey, I'll be there too. And anyone in the Massachusetts area, come to mass adoption. And thanks again for coming on, Sean. Where can people find you if they want to find you on the internet?
Yeah, my Twitter account is sovereign_Sean, and yeah, that's where I just interact with the Bitcoin community for the most part. But really appreciate you having me on, Connor. It was awesome talking to you.
Yeah, absolutely. Looking forward to publishing this, and I'm also looking forward to you publishing that article you sent me and getting that out there. I have to share that as well.
Awesome.
Cool. All right, guys. Thanks for listening.